You opened Robinhood. You search for Vietnam. Maybe you found the VNM ETF. Maybe you found nothing useful at all. Either way, you hit a wall. And that wall has a name. It's called the Frontier Market Barrier. And today, I'm going to show you exactly how to get through it. There's something most people don't realize. Vietnam's stock market isn't on Robinhood. It's not on Fidelity. It's not on Schwab. It's not on any Western brokerage platform you've ever used. That's not an accident. Vietnam runs its own financial infrastructure, its own exchanges, the HOSE in Ho Chi Minh City, the HNX in Hanoi, its own settlement system, its own rules for foreign investors. When you try to find Vietnamese stocks the same way you find Apple or Tesla, you're using the wrong map. The market exists. It's a $380 billion market. It's just not where you're looking. So the question isn't, why can't I find Vietnamese stocks on Robinhood? The real question is, what do I actually need to access this market? There are three ways foreign investors get into Vietnam. Each one has different levels of access, different levels of effort, and different trade-offs. Let's go through them. The first way, and the easiest, is an ETF, specifically the VNM ETF. It trades right on the NYSE. You can buy it on Robinhood. Today, right now. One ticker, no special accounts, no paperwork, no Vietnamese bank account. The VNM ETF holds a basket of the largest publicly traded Vietnamese companies, banks, real estate developers, consumer goods brands. It's not perfect exposure. There's a management fee. The basket is limited. But for a foreign investor who wants to start somewhere, it's a legitimate entry point. As of early 2026, VNM was up over 50% year-to-date. That's not a typo. The second way, direct investing through a Vietnamese brokerage. This is how serious investors get real access. You open an account with a Vietnamese broker, firms like SSI, VPS, or VNDS. You set up a securities trading code. It's your ID in the system. You open a dedicated bank account to move funds in and out. And you register with Vietnam's Central Securities Depository, the VSDC. Yes, it's more steps than buying a stock on your phone, but this gives you direct access to the full Vietnamese market. You can buy individual stocks. You can build a real portfolio. You're not limited to what an ETF manager chooses to hold. The process has gotten easier in recent years. Several brokers now offer English language support specifically for foreign investors. The third way, Vietnam-focused investment funds. These are actively managed funds run by professional teams on the ground in Vietnam. You invest in the fund, they do the stock picking. This is the hands-off option for investors who want Vietnam exposure without managing individual positions themselves. The trade-off? Higher fees, less control over what you own. But for some investors, that's exactly the right fit. Three ways in: one ETF, one direct brokerage account, one managed fund. The barrier isn't that Vietnam is inaccessible. The barrier is that nobody explained how access actually works. Now you know. In the next video, I'll break down the one rule that limits how much of any Vietnamese stock a foreigner can actually own. It's called the 49% rule, and it changes everything about how you build a position here. Follow the channel so you don't miss it.